Neither Better Trades or any of its personnel are registered broker-dealers or investment advisors. I will mention that I consider certain securities or positions to be good candidates for the types of strategies we are discussing or illustrating. Because I consider the securities or positions appropriate to the discussion or for illustration purposes does not mean that I'm telling you to trade the strategies or securities. Keep in mind that we are not providing you with recommendations or personalized advice about your trading activities. The information we are providing is not tailored to any particular individual. Any mention of a particular security is not a recommendation to buy, sell, or hold that or any other security or a suggestion that it is suitable for any specific person. Keep in mind that all trading involves a risk of loss, and this will always be the situation regardless of whether we are discussing strategies that are intended to limit risk. Also, Better Trades personnel are not subject to trading restrictions. I and others at Better Trades could have a position in a security or initiate a position in a security at any time.
Hello and welcome back. And go through the big guys here, and this is one I used a long time ago, a little quote, and I'm going to use it again because I love it. I think it's awesome, and it is an awesome quote, especially relative to trading and doing what we are all working towards, right? If you're interested, you'll do what's convenient. If you're committed, you'll do whatever it takes. And as we all know, trading is difficult. It's not easy. It is challenging day in and day out, and I don't care how long you've done it. I've been over 15 years, and every day is still challenging. So you got to be in it to win it. You got to be in it for the long haul and be prepared to do whatever it takes. You're going to have good days and bad days. It's a roller coaster ride. Some days and some weeks and some months are awesome, and other ones just flat out suck. Excuse my language, but it's just the truth. So you got to be all in. You got to dive in head first, and I love the little picture there is diving in head first, toes in the air and all in. So considering the fact that you're here and you're in Insights, I'd say you're pretty committed. The fact that you are investing in your education and your knowledge and experience is a good thing. So let's get to it. We've actually got a lot this week. Finally, it's kind of kicked back in now that the market's made a big move. 22 candidates. The last, 3 or 4 weeks we've had less than 20, and normally we've had 20 to 40. So kicking back into gear, it looks like. So that's good. Has me excited at least. So the first one, ABC. There are 3, I think maybe 4 bullish candidates on here, even though the overall market is looking bearish. This is looking bullish. We've got a pretty solid move to the upside. A little bit, there's obviously with the market getting bearish, if it continues that way, then obviously we want to be cautious with the bullish moves because we've got 3 days of move, Wednesday, Thursday, Friday, but the volume got lighter and lighter as we went. It broke out of that 101 level. It broke above 100 on Wednesday and then continued for a couple days, but the volume got lighter. So the one thing we have going for it here, as we can see, is we're walking the bands, pushing the bands higher. All the indicators look bullish. The major concerning point there is the 200-day moving average right there, which may slow it down if it continues. So, but we'll just prepare for that and see what the market gives us. Autodesk. Big bearish engulfing pattern Monday, and then a follow through. We've got almost even though it's not textbook, it's not beautiful. We've got a mat hold, a bearish mat hold. And then also, again, not perfect, not textbook, but a double top kind of. It's not really even that close, but it's a little bit of a stretch to say that. But you can see the indicators looking very bearish. Bands are pinching a little bit. And I think if we break below that 60-30 level, we are most likely headed lower. Had a big run. Everything was looking great. Now it's not. So we'll see. AEP. Scrunch this down without killing it. Big bearish engulfing pattern on Thursday. A little bit of fall through for Friday. And looking for hopefully a big move to the downside. And the stop up one, because I know you look at that stop and go, wait, it's not below a support. But here's what we've got. And there's 2 or 3 this week. And we don't look at this very often, don't use this very often, but the 200-day moving average is right there. It sat right on there Thursday. Big bearish engulfing pattern with pretty decent increase in volume. Sat right on the 200, and they gap right below it on Friday. Just starting to push the band, so if it continues lower on Monday, probably likely that it will continue. Got about $4 of potential there, so a decent move. Alexion Pharmaceutical, biotech, looking at a potential bullish move. Again, starting to walk the bands, pushing higher, getting up and we may run up and hit that $200 mark. Nice round number, but looks pretty bullish here. Good solid volume coming in. And if the market is turning south, it's not uncommon to have pharmas and biotechs get bullish because it's a safe haven. It's like we've talked about many times here. If you're on a life-saving drug that one of these companies produces, you can't really stop taking it. You're going to buy that before you buy everything else. So farmers and biotechs can get bullish in these markets. So Ambarella, rollover from last week. We got 3 of them. And still looking a little bit bullish. So we will see. Not sure what's going to happen with that. Amgen, another one. This one looks bearish. We've got almost a head and shoulders showing up there. We broke below that 156.69 area again, though. Not a huge increase in volume, but would have been nice to see that. But there's the other part, too. We're below the 200, below the 50. Stokes, MACD both looking bearish. So this looks like it wants to make a move to the downside. So I like this a lot right now. Last week was kind of mediocre. Now it looks better. Anthem. Another bullish candidate, and I know you're looking at that plan going, that's right in the middle of the range. What's up with that? Well, there's the bigger picture, and then we go to 3. And again, don't do this very often, but there's the 50-day moving average coming in. If it breaks above that, especially if it does it Monday, then not only do we have the bands turning north, pushing the bands, but we'll be breaking above the 50-day moving average as well. And even though that's $7, or no, excuse me, that's about $4. So it's not a huge potential. But then again, this could be a 1 or 2 day trade. And that in these type of markets, especially if you're going counter the big trend, if we're going bullish when the rest of the market's going bearish, the shorter term usually the better. Then again, this could be one of those pockets that gets really bullish when the rest of the market's bearish because they're selling off one sector and dumping into another. So we will see. Bed Bath & Beyond. This is that one. But that huge head and shoulders has just been forming since 12 for the last 3 years. And it just broke it. And let me scrunch this down a little bit, or a bunch, I should say. And we've basically just been in this rectangle, this sideways move for the last 3-4 weeks. So if it breaks below that level, again, I think there is no moving average there. We've just got the bottom of that little triangle there. So if it breaks below that, and notice the bands are pinching, if it breaks down Monday, Tuesday, maybe even Wednesday, this thing has I think a high likelihood of just accelerating to the downside, kind of like we did last time. And we look back here, October, it went sideways for 3 or 4 weeks, and then dropped quick. And obviously that's what we'd like to see. So that's what we're looking for in Bed Bath. Excuse me, Chevron. Nice little head and shoulders. Not spectacular. It's not beautiful, but it's there essentially. And interestingly enough, you get the measure move out and see right where it drops into a very solid, very, very solid old support level from 2011 and from 08. That's what just makes me laugh when people say, yeah, those pattern things, yeah, do they really work? Yeah. I would put a nice chunk of change that this will get down to the 79 to 80 area. So everything looking bearish on it. Dominion. Another one, nice little breakdown a couple weeks ago, and then basically just sideways. And looks a lot like the market, little doji on Friday. Not much volume, so looking for it to break below that 64.40. The breakout, classic, exactly what I'm looking for. Bands, it's pushing the bands big time. Everything's looking decidedly bearish here. So if it breaks, I like the looks of it. Tableau, however you pronounce that. Data is the ticker. They're here based out of Seattle here. And broke down. We had that huge gap. I think that was earnings. We broke that $90 level, which means we're likely to go down to that 77. There's not much. We could throw a line in here, make that a minor area because there's not anything that's significant there. Something to be concerned about if it continues to fall. Bands are starting to expand. That's beautiful. Breaking the 50-day. Stokes, MACD both looking extremely bearish. Looking good for hopefully a quick move to the downside. Facebook, similar to many others, basically just sideways move over the last 3 to 4, if not 5 weeks. And then Friday, everything broke down. You see Facebook not that old. Everything here looking decidedly bearish below the 50-day, just barely. But a continued move here. We want to watch the $100 area. Obviously, for that round number, it may dig in a little bit there. But don't panic. A lot of times we look at that and people freak out and they go, it's hitting 100, it's going to bounce, it's going to bounce. And there is something to be said, so maybe tighten up stops, maybe even take out a small piece of it. But depending on what's happening, I mean, it might blast right through it. But if it freaks you out, then take some off the table. Remember, this is not just about managing numbers. It's mostly about managing your emotions and managing not just managing the trade that you're in, but making sure that you're not panicking and freaking out. So if it freaks you out when it hits 100 and starts to bounce, then clear out most of it. So, or part of it, whatever makes you comfortable. Gilead. Here's an interesting one. This is biotech pharma. We're just talking about how some of these may go the opposite direction. If the market tanks, these may go up. This one looks bearish though. Looks very bearish. It's starting to push the bands to the downside. MACD Stokes. Everything about this looks bearish. So. But Gilead's a big, mature company though too, so it may get sucked in with the downdraft of the rest of the market. So McGraw-Hill Financial, media publishing, big breakdown on Friday, big volume, breaking through that. What is it, 93.13 area, which is a pretty solid old support and resistance area. So if it continues to the downside, we're probably looking at about 85. Triple M. Another one basically just going sideways. It's a little more of a channel versus some of those have been a pretty tight range. This is a little bit more of a range. But then again, it's $150, $160 stock. So a break to the downside would not only be a break of the 50-day, as you can see there, but the bands are pinching. If those turn, Stokes, MACD, both looking bearish. Everything about this looks beautiful if it breaks. This right here is a perfect setup. We've rallied, we're up, we've been going sideways for month and a half, and we're still in a position. It's in a position where if it breaks down, then we can still catch it. It shows there's only $3 based on this trading plan, but there's a decent chance that it could, just like last time. I mean, you see here it broke from 150, went to 136. It's 14 points. It could break right through 150 and keep going. And so obviously that's the ultimate goal. Just making sure this thing is recording. What is going on here? Why do I have 2 lines? I don't know. I think I accidentally duplicated it somehow. Merck, another pharma. Another one just kind of slowly drifting lower the last 4 or 5 weeks. Like Gilead, this is a big pharmaceutical company. Things are looking more bearish with it, breaking the 50-day. The bands are starting to pinch, starting to drift a little lower. So a break to the downside here, just like with Triple M, we're ahead of it far enough where we can catch it. So, except the difference here is we got about $2.50 of potential on a $50 stock versus $3 for a $150 stock. So, then again, Triple M could be a bigger one longer term though too. So, both looking good. I like being this far ahead of it. Paychex, big drop to the downside. Kind of a bearish engulfing pattern on Friday. I just noticed this, and it's mainly because I haven't been looking for them, but 12/17 is coming out with earnings. Oh, you know what? I did see that. You know why I didn't worry about it? Because this could be one of those where we get on, and I'm still playing with this a little bit. Get on it ahead of time, and if you can take a bulk of the position out before earnings and have no money on the table, who knows what happens with earnings. So that's a possibility. So be cautious with this one, though, because of earnings coming out on the 17th. Royal Caribbean. The cruise lines have been tearing it up the last couple of years. But it's sitting right on the 91.80 support level. Below the 50 already. Stokes and MACD are both starting to look bearish. We've got the 200-day moving average down there at 84. So we've got to be aware of that it may not get all the way to the target. But I like this because we're already ahead of it. And notice the candle on Friday, we gapped down significantly, then retraced all of it. So we gapped down in the morning, then I'm guessing it probably rallied from there. But by the end of the day, it had turned over and dropped all the way down and closed on almost on the low, which is right at the support level. So if it breaks down on Monday, I think we're sitting pretty. Splunk. This is one that's been on the radar for a while. This is software, I believe. Broke their support there at 55, basically with more than double the average volume. So it looks beautiful. Bands obviously expanding big time, and everything looking bearish. Stoke extremely bearish, MACD extremely bearish. The only challenging part is we need this thing to pop back up a little bit. It's already below the entry point enough to where there's too much risk right now. So might be too late for Splunk. Ventas. What this? Somehow I'm duplicating this. The second one. It's weird. Another one. Looks like it's in the middle of the range. And yep, we're right at the 50-day. Whoops. Not what I wanted. Escape. So using the 50-day as a stop out point. And then the target there up at 59.35. So looking bullish. MACD and Stokes both looking pretty solid. This is my least favorite of the bullish candidates. But we'll see. Let's see what the overall market does. Western Digital. This one has gotten beat up big time. 110, we're down almost halfway there. Almost 50%. In fact, that's the target. Scrunch this down. Now, this is one that could go either way. It's been sideways for 3 or 4 weeks, like many of these. And then Friday's candle actually looks like it could be bullish. It could be holding this support level. Pretty solid volume. It closed up above the support. So it could go either direction. Indicators are looking bearish. Stokes is looking bearish. MACD is basically flat. So this was one of those that was kind of tough. It was kind of a mixed feelings about it because it could go either way. So basically, going to keep an eye on it, see what happens Monday. If the market decides to rally and this thing looks like it wants to go, might flip this plan over. But as you know, I don't like doing dual plans. Some people do, and it's just too darn confusing. So I just do one, and if it shifts gears, then we'll flip it over and see if we can catch it. If not, then we just leave it. So, and last but definitely not least, another Head and Shoulders. Had a few of those. Again, they're not pretty, they're not textbook, but they're essentially there. So, and there's another funny one where you got the measure move showing exactly at a previous support. And this one's about $2 or so. And it basically broke the neckline on Friday. So if it continues down on Monday, then we should be sitting pretty. So good timing. As you may have just seen, my battery just popped up and it's about to die. So I got about 5 minutes. I got to plug this thing in and get her charged up so I can upload this thing. So hope you've all had a great weekend and y'all have a wonderful week. And we will see you back here very soon. Bye-bye.